All right, next we'll talk about Section 1250 depreciation recapture. So Section 1250 property is depreciable real property. So when we were looking at our classifications, we had 1250 over here, depreciable real property. All right, so it's a type of 1231 property that's special for depreciable real property. So under Section 1250, the gain due to accelerated depreciation in excess of straight line is recaptured and considered ordinary income. So an important point that we need to make here when we're talking about 1250 depreciation recapture is that does it apply under makers? And the answer is no, because makers uses straight line depreciation. So before we had makers, we had accelerated cost recovery. And so that's what they're referring to here when they say that the excess of the accelerated depreciation that you took over straight line would need to be recaptured as ordinary. That's for older depreciation methods that were using accelerated depreciation for these assets. Now, if you're placing an asset into service and using makers, they are using straight line and you would not have this 1250 depreciation recapture. All right, let's move on then to Section 291. So Section 291 depreciation recapture is what we're going to call the modified 1250 recapture. So this only applies to the disposition of depreciable real property owned by corporations. The amount of the gain recaptured as ordinary is 20% times the lesser of the recognized gain or accumulated depreciation. Okay, so a couple of important points. It's only related to depreciable real property owned by corporations, and the way that we calculate the amount recaptured is 20% times the lesser of the recognized gain or accumulated depreciation. So we're looking at a lot of the same things, but we're calculating the recapture differently. So we have Sandstorm, which originally purchased a trader business building several years ago for $750,000. So it's a trader business building. We've held it for more than 1 year. The accumulated depreciation, which is straight line, is $450,000. Sandstorm sells the building for $1 million. What is the gain on the sale and what type of gain is it? First, let's calculate the adjusted basis. So we paid $750,000 for it. The accumulated depreciation on it was $450,000, and that gives us an adjusted basis of $300,000. Then when we're calculating the gain, we get $1 million in proceeds minus our adjusted basis of $300,000, which gives us a $700,000 gain. And the question is, what do I do with this gain? How am I going to tax this gain? So I know I'm in 291 because it's depreciable real property. It was used, straight line depreciation was used. It's a corporation. And so I'm looking at Section 291 rules. And they say that I take 20% times the lesser of the recognized gain, 700, or accumulated depreciation, 450. So I am going to have to recapture using 20% times 450,000, the lesser of accumulated depreciation or the gain. So I get $90,000, and I'm going to just say must be recaptured. So I'm going to recapture 90,000 of the gain and call that ordinary. So I have my $700,000 gain, and I'm going to break it apart into two pieces. 90,000 must be considered ordinary. The rest of the gain, $610,000, is going to be considered 1231